Hello, this is Steve Malone with CompsFX. I hope you're doing well today and you get some good trades. Over the last number of weeks, we've seen two of the major currency pairs, the euro dollar having made a 1,000 pip move and the pound dollar making a 1,000 pip move. And I do believe that there's more movement potentially down on both of these moves, given some of the fundamental nature of the market and some of the technicals that we're going to take a look at here in a moment. Fundamentally speaking, we've seen broad U.S. strength across the board, with better than expected economic data such as ISM, U.S. factory orders, and U.S. construction. Now, the non-farm payroll number was way off the mark at 142,000. Many had been expecting 220,000. However, that was counterbalanced by Dallas Fed President Richard Fisher, who made the comment that he felt like there would be inflation and improving labor market dynamics to help put more pressure on the U.S. Fed to raise the key interest rate sooner than expected. It kind of gave a bit of a balancing effect for the dollar, and we got some more dollar strength today as the dollar index pushed up above the 84 mark. Now, a couple things to be aware of, though, in the euro dollar, and attributing to its downward play was last week, the ECB surprised the market with an interest rate cut down to 0.05%. Not expected at all to take place, and that caused this abrupt move from about the 31.50 area all the way down here to about the 29.20 area, where the market bounced back up and did not quite get back to the 130 area as some had expected, but yet has fallen back down, and today hitting the 129 level. So where do we go from here regarding the euro dollar? When we take a look at the euro dollar on a weekly chart, we can see that this big progression over, but you see we have some levels back in this area. If I take that lowest level, which puts us at about the 27.37 area, and I run my fib retracement tool from the extreme low to extreme high, you can see that we're sitting just at about that 88.6 level, and there's the possibility that we get that market to push on down right to that 100% level, which would put us back down there at around that 27.37 area. Now, one thing of note, right now where the market sits and where the market was, if I were to simply run a Fibonacci extension from that 129 to about that 139 area, let's just see potentially where that would put us. Well, at 127.2 would put us somewhere in the ballpark about the 26 area. If I put a line at that level and go back in time, I found this quite interesting. It comes right to a low going back to January of 2012, when we hit this bottom and bounced back up, causing the start of an inverse head and shoulders and that movement to the upside. So there's the potential, some are looking at in the marketplace, to see the euro dollar come down this week to 128.50, where there's some options residing in the market there, possibly down to 128. From a weekly perspective, then we push on down to 26, and then some are looking by year end the possibility that we push all the way down towards that 141.4 level, somewhere right around the 125 level. Now again, this is big picture. So going closer in, looking at what we have to work with at this point, if we simply look back at what's taken place here in the market and see where we could potentially go to, I think that if we drop down to about that 28.50 area, we're going to find ourselves with some option-related business that's going to find some support, some bids of the market. We see the market bid back up. And just simply looking at last week's low to the high that we had last week, which was right about here, you can see that the 127.2 extension comes in at 28.60, and then the 141 comes in at 28.27. I do not expect the market to drop below this, but there is always that possibility of the push down to 128. The market, based upon information from the IMM, is that the market is still heavy short the euro dollar. Now just be aware, when the market gets heavy in a direction, oftentimes you're going to see a natural correction in the marketplace. You're going to have only so many sellers. There's going to be some buyers, and those buyers are going to be those large institutions that are going to be probably pushing against the shorts and going after the stop loss orders on shorts. Now we look at the pound dollar. Now the pound dollar has had a move from this low point to the high, and we're coming in pretty close to the 50% level. Now this is a key level. The 160, not only is it a 50% retracement, it is a large round number. 160 is pretty heavy based upon the history of the euro dollar. And if you take a look longer term, coming out to a monthly perspective, you can see that we had this pennant type formation, and we're coming back into this pennant here, getting below even that last pennant high that we had. So pretty significant here. Now if you'll notice, going back to the weekly chart, that the 618 comes in at 57.20. Some are looking for the possibility of getting to that point, not only because it's the 618, but because it's also coming into some previous resistance back over here. You see that? So we have some levels potentially, if we break below the 160 level, it'd be about the 58.90, call it 159, and then a possible move down to about the 57.50 area. Now, closer in inspection of this, looking at the pound dollar from an hourly chart, one of the things that some traders are looking for this week is we had a gap open. From this point to this point, we had a gap open, and the market generally fills that gap. Well, that hasn't happened. One of the major reasons for the pound dollar making these significant moves, you have this big move down last week and then another move down, is simply due to the referendum for Scottish independence. There's a vote coming up September the 18th, and this vote will determine if Scotland gets its complete independence from England. This goes back to changing up treaties that were set back in the 17th century. There are fears right now that Scotland would opt out of being a part of the UK, and this could cause some interruption with the currency flow. Do they maintain the pound, or do they shift to a Scottish type pound or some other Scottish monetary unit? How will Scotland move forward? That's a big question, and the market doesn't like uncertainty. Most of the polls last week and this past Sunday show that most favor a move towards Scottish independence. That has caused this major pressure down in the pound dollar. So there's a fundamental out there in the marketplace that may not see us push back. I was looking for the market to come back to about the 62.45 area, which is about the 50% between this 63.27 down to this low here right around the 61.60 area. I thought the market might get up to that level, didn't, fell back over, and now has hit that 161 level. So again, big picture, we'll be looking for the market to possibly push down to the 160 level. It's pretty much in the cards. We're within 100 pips of hitting that, unless there's some large institutional bids that's going to push it back up. Remember, when the market's heavy short, oftentimes they push to hit the stop loss orders. With that in mind, look for the market to push down. The Traders Dynamic Index suggests that we still have some downward movement. It's sitting here with a level of about 21, 22. We could see that drop lower. On the euro dollar, I'm expecting to push down to 128.50, possibly on down to 128 this week. We'll be looking for that. And from a weekly perspective, the TDI is pretty low. It's underneath 10. It's sitting here just about the 9 level. It could eventually go a bit lower. So some in the market are expecting a possible retracement or some congestion, some flattening out of the market before we move lower. So just be prepared for that. If the market happens to get down to 128.50 to 128, look for the market to possibly push back up. So at this point, even though they've both made 1,000 pip moves, there's the potential to see both move about 100 pips lower from this standpoint. This is Dean Malone with CompasFX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.